What is going on, guys, and happy Wednesday. Welcome on into this market close live. We're going live for the next hour and a half till the market closes. And we got to start off with inflation and data that came out this morning. So as many know, we were kind of waiting on, as we talked about in the last live and whatnot, we're kind of waiting on the CPI numbers, right? And the expectation was roughly 7%, and we pretty much came in line. So that drops this morning. Let's go over to the charts. Let's talk about what happened. That drops this morning, and once it hits, kind of see a little volatility, and the market kind of pushes up. So SPY, was just barely green going into the morning hours this morning, and then it pushed up, and it was up a good bit, and then it pushed up a little bit at the open after the first hour and a half or whatever, and then it pulled back, kind of went slightly red, then rebounded. Now it's slightly green. So really, it's just chopping around a little bit today. Honestly, kind of what I expected because we came in line. We came in line with expectations, and when there's less uncertainty in the market, it's actually a good thing, at least for the overall market wise. But what's happening right now, and we are still dealing with it, is individual stock picking, right? I guess as an idea or as a strategy, whatever. I think as you simplify things down, that is what's not working. That is what's not working. And why is that the case? It's because we have right now heavy kind of weight on algorithms that run the market. Like 70-80% of the stock market is algorithmic trading, right? So these algorithms are really factoring in the inflationary fears and like what's going on there. And so macro level, right, these bigger kind of pushes are what's driving the market. But when you come down and you look at individual stocks, you can kind of think of it as like micro level, right? You go into individual stocks and whatnot. It doesn't matter. Good news, good earnings, valuations. It doesn't matter, right? We've been talking about it for a while, past couple months, but that's really what it is. And to get a better feel for it, think of it that way, right? We talk about how the big name stocks are moving and the other ones, the small caps and whatever, the growth plays are not. Just look at it as kind of the overall indices, and it's like an indice market where it's like macroeconomics are driving the overall indices, and that's it. There's nothing else underneath the surface. When in years past, we had at least more of individual stocks that would maybe be small caps or this or that would have this news, bad news, good news, offerings, this and that. And you'd get a lot more kind of volatility and action under the surface. Whereas right now, you're not getting that. You're getting some pretty good volatility in the overall indices. So that's kind of fun if you're, options trader when it comes to SPY. You want to trade options on SPY. Yeah, that's kind of been volatile, right? It's been wild. But you're not getting that as much across smaller names. Now we're starting to see, here and there, some stocks making some moves. VINE, tiny float, low float stock. Take a look at this thing. Yesterday, all of a sudden, the thing pops up. It goes from 430 to 8. It goes 100% in a day. Now it's up, hit 975 today. So you're kind of seeing a little bit of that type of stuff happen. Look at this thing. It's a recent IPO. So, there you go. Hit a new high, hit up nearly $10. But outside of that, you're not really seeing as much of that kind of like, okay, stock has positive news and then it runs. One of those stocks I'm not in right now, but I want to get in very, very soon is ELYS. The CEO, we just got it. There was an SEC filing that dropped yesterday. CEO took salary and bonus, I believe like $425,000 roughly in stock. So, why would you do that? It's essentially like, okay, well, I could go buy shares of stock, or I'll just take my salary in stock, and that's a feel good type of thing for a conviction behind your company and why you believe that, hey, you're undervalued, and that type of action or that type of conviction or that type of I guess statement is what you want to see, and that's how I think you can pick those, or you'd hope you'd be able to pick those individual winners, and that's something that kind of worked in the past. But again, as we've been saying, right now it's not. Eventually that'll change, but that's one of those factors that you can utilize to kind of pick those individual winners. Whereas unfortunately right now we're in that indice-driven market where it's like, hey, macro events and algorithms are driving the overall indices, but that's it. There's no volume in anything else really for the most part. So that's like the biggest thing we've been dealing with. It doesn't matter. Like CPI data comes out, you're in small caps, you're in other stocks that doesn't matter, because the market might go up and hey, maybe your stocks are flat today or maybe slightly up or whatever. Market goes down tomorrow and you're down 5-10%. Like that's kind of what's been happening, right? It's like just that hard pull to the downside. Let's see. Matthew, what's up? What's up? I'm pumped to go when we start a little bit early, but I'm pumped to go to the end of the day and see how things play out because, we kind of look at this volatility again. We got 5-minute candles here. Let's take a look at this. Yeah, we were just pushing back to the downside a few minutes, like I guess, half hour ago, and now we're pushing back up. We're at VWAP again on the S&P. We held up roughly around that 470 level, and now it's pushing back up. A little more of a challenging day, I guess, in terms of choppiness and volatility. I got out of my Starbucks swings because, I had those out to March, but it's just hovering around that, 104. Maybe, I had a couple day trades on it yesterday. As it dipped down to that support level, which those were individual trades by themselves. They were fine, but the overall swing, I was looking for kind of a recovery, but now we got a change in trend. So past couple months, every time Starbucks takes these dips down to the low 100s, it has a really sharp rebound. And so maybe it rebounds, but it's not doing what I expected in a sense based on the past history. So rather than hold this thing and all of a sudden I wake up one day and it's down on $100 and my swings are down even more, right? I'm just going to cut it here as I don't like how it's handling this 104. It very well could bounce here, but on a green day in the market, I was kind of expecting a little bit more. I was looking for this thing to maybe close over 105 today. That looks extremely unlikely, so I cut that one out. But I started actually, we talked about Mesa, MESA. I started buying some of these. This is an interesting play. I'm looking at this and I'm thinking about like when I'm buying these calls, I'm starting in very, very small because I don't have enough cash available and I really don't want to, be stupid and just all of a sudden overload myself across more positions that I don't need. But I have a good heavy weight in the airlines, but here's an airline play that I like, right? I'm looking for this to be a 100 to 200% minimum option play. I think it can go way more than that, but I'm looking at that as the type of play that I want on Mesa. So we're going to see what happens, but you have about 6 months right now from when I have those options out to July 15th. So in the next 6 months, that's what I'm looking for on these options, a 100 to 200% move. And so I bought them at 133 is my average. Yeah, 133 is where I'm in, but I'm going to be buying more as I have cash available. And if I don't, let's say airlines make a big move and I never kind of have the cash available to add in heavier, that's fine. No big deal. I'm holding this thing against 5, so I want to see it holding up over $5. And any dips from here, honestly, I think are really good add points on Mesa. So we'll see. But I bought the $5 calls out to July. So in the monies, you're not super deep in the monies, but you're in the money. So you're going to risk, you're playing with leverage here rather than just like, if I could go, you could go, let's just look at some of these. You could, go for the 750 calls. And hey, this could be insane because if these 750s go to a couple bucks, and we go to 10, let's say Mesa goes to 10, which is, hey, based on last year, $10 is right in here. It's a realistic, I think, a realistic point. If we get up towards 10, then those 750s are going to be worth $250. Right now they're trading for 50 cents. So do the math. It's a couple 100% right there. That's pretty nasty, right? Nasty of a move too. Now I'm playing the 5s, so it's a little less risky because what if we finished at like 750? By the expiration date, well, those 750s are going to be worth pretty much zero, and the 5s that we got are going to be worth 250, which is going to be roughly 100% from here. So hey, it's still 100%, even if we only get to 750 by the expiration date, which you got 6 months to do. I think we can do better than that, but I think honestly, if things work out the way that I'm looking for, it should be a 100% play. I don't want to say at a minimum, but like that's what I'm looking for. Obviously, there's always risk. You have to take that into account. Hey, we drop below, and it could be a loser, and I'm fine with that, but I'm targeting at least 100%. So, I'm going to risk accordingly, right? Now, on those types of plays, obviously, I'm not going to be putting my entire portfolio in. I'm not going to put in 20% of my portfolio into that play because there's a little more risk there. But it's 100% potential, so back your way into a risk reward. I'm fine risking X $100 or X $1,000 to make X hundred or X thousand, and that's the idea behind it. So we'll see how that works out. We do have a little bit of pressure on the airlines. I believe right now China's gotten some stuff going on. They're, back in, I think, lockdowns, quarantines, or whatever. I honestly, same deal, I guess, we've been kind of dealing with, which is fine. I think we're still in this, kind of choppiness to some degree. But look at the trend on jets. We just are seeing consistent higher lows. So, even though we might be down from like some of the highs earlier this week or even today, consistently putting in higher lows on Jets. I love that setup. So I think we're going to be setting up in the next couple months. I think it's going to be a big time frame. We'll have to watch the backside, of those, I guess, surge case curves and stuff. As we come down the backside and that becomes more widely kind of populated in the news, then I think these things will be, I guess they're going to be let free, and they'll fly. They'll fly a little bit. We'll see. All right, BBIG is up. Let's take a look. I don't know. I saw this was getting some action today, but I didn't really take too much of a look. Yeah, I mean, hey, look where it came down to. It came down to our exact zone that we have now had this for the past couple months, and every time it comes down to the zone under 250, down roughly versus 2, it's been a good buy. It's been a good bounce buy. Now, personally, in the current small cap market environment, I'm not a huge fan, but if this thing pulls back and starts to build higher lows and you get it down closer to 250, there's a better risk reward there. What was some that I was looking at? Let me look at, I have a couple on my list that I was potentially looking at. Here's another one. Craig is one that popped up that I was looking at. Look at this thing. It's insane. So this thing has been green like every day for like almost a month now. So if you look at this type of chart and then you look at like the PETZ, how this was like kind of a liquidation, just one of those Chinese companies, boom, all of a sudden it went to like nothing. And there was another one as well. I forget which one it was. Dogs, DOGZ, Dogness. Yeah, look at this. It looks, the Craig chart has that type, reminds me of this chart where like Craig kind of is just grinding up for like, I don't know why, almost no reason. And it's going to have one day where it dumps. So I would be a little cautious on that. But as the way that I see it is this. If you're looking for a small cap that's got the algos or got something going for it right now, it's this thing, but you want to play it where, hey, if all of a sudden we drop below the prior day low, that's your sign the trend is changing. Hey, maybe it keeps going, but I would get out. So if you notice that you go back to really the start of this year, even end of last year, we have had continuous higher lows. Like each day has put in a higher low. We have literally not had a day with a lower low compared to the prior day since the 28th of December. So it's pretty consistent. At one point today, it was, I think, down on the day, like briefly, just under $7. And that was obviously now looking back, that was the dip buy because you could have snagged this thing again, right? Did it make a new low compared to yesterday? No, it was still in line. It still made a higher low if it holds that level. So under 7 was a great add. Now it hit 773. Now it's at 744. I mean, if you're just talking, percentage wise from that level, you're up, 5 plus 6%. It's been a good trender. So it's fun. It's fun to watch some of these guys with these trends because as long as the trend holds up, it's still a valid play. But at some point, I think we're going to see a massive knife down. This thing is going to come back down to sub $5, I believe, at some point. Depending on who knows, maybe it goes to 10 plus. If it goes 10 plus, then maybe not 5, but it's going to have one of those massive knives. It just kind of is setting up something weird's going on, and it's not something I'd be wanting to hold overnight. But for an intraday possible dip buy trade, as long as it holds, it's easy to hold up and it's easy to play this risk wise. Hey, as long as this doesn't make a new low compared to yesterday, then I'm in. So highly short stock like Relly. Let's take a look at Relly. Let's pull it up. Let's go to the daily chart on it. I actually didn't necessarily like it because here's why. We're kind of at this trend now. If it can keep pushing against this trend, we'll see. But it cracked this trend, and so that was kind of my, at least, I don't know, I want to say signal, but say I'm not a huge fan. If it dipped down here and it held this trend, I would have said, okay, maybe that's a valid dip buy, but it dipped below, and now it's trying to push back up. It is highly shorted, so it's something like, I personally wouldn't want to mess with it too much because in my experience, this could be one that all of a sudden is back at, sub 5 tomorrow, or, it's at 10 plus. And it's like, is the risk reward up here as good as it was a couple weeks back? Probably not. So personally, I'm not a huge fan. Reminds me of PTPI. Similar deal. PTPI could be a good idea too. With a risk of the 50 SMA or like 250 or so. So PTPI was one of those, right? Same setup almost, right? I think it's a highly shorted stock. it was trending, and, it was kind of buy the dips, sell into the rips, and then eventually it broke trend. Now, it broke trend and came down to a key area of support that we like to look at for a lot of these things, momentum stocks and the 50 SMA. So that's why I kind of like it right here. We have two indicators kind of colliding. We have the 200 SMA and the 50 SMA, and I would say it's a decent play with a risk down to like 250. I may even look to take a position there too. I kind of like that. Let's take a look at the 5-minute chart. How is it looking today? So it's kind of slowly just selling off. It hit down to 267 today. But yeah, I mean, as long as it doesn't go below these lows from this past week, I kind of like that, from, I guess, Monday's lows. If it holds 255, 250, I wouldn't be opposed to picking something up. And of course, what's your risk reward here? Your risk from here is about 20 cents, so about 6%, 6 to 7%. Your reward for a move back up to 3 plus, where we're there this morning, is 13. So you're going to risk half of what your reward, and your reward could be more, but I'd be looking to take profits into the move to 3, and then I would be looking obviously for a bigger move if we can hold over 3 and push. But keep your risk reward in line, and I think it's not a terrible play. You also have the indicator support, so what would throw it off would be a pretty nasty day in the market tomorrow, or Friday. But as long as it holds trend, hey, it's been one of those everyone's been coming back to. It seems like. CNBC talking about shorts because on natural gas popped hard, right? We had I believe there was winter data or whatever projecting a colder winter than normal or whatever. And that popped. I think natural gas is up a good. Well, it was up a good bit. At least last one I checked. That's solid. Let's take a look. I want to go back to this stock. Load was a stock that we looked at. Look at this. Look at that. I mentioned this as a possible kind of, hey, I kind of like this one as a trender over the coming days and weeks. And it had a spike, beaten down name, had a spike. And then it came back and held the prior lows of that 125. It held that. Now it's pushing back up. It's made a nice little grind. It's up now 5% more today. Gold's been up a little bit too. Let's take a look. Do we have a little GLD? Yeah, here's the GLD. Gold spider. Let's take a look at this. Here's the weekly chart. This actually looks pretty decent for gold. So load's one of those mining plays. I like that setup right here. Higher lows being put in. As long as we hold up over like 165 right now, we're looking good. A push up over 170. We probably go to fill this gap up here. Let's just go to the daily chart again. Push up over here over 171. You probably go to 172 pretty quickly. That's a little gap fill. Gold's setting up as well. So I think a good way to look at some of these, this is kind of how I'm going to be playing, when my swing positions and whatnot, after the first pop, it's going to be interesting. So like if you look back to load, it really just took, it seems like, it took that first little pop for this thing to get back on some radars, to get back onto some, I guess people's watch lists and whatnot. And because no one wants to buy this thing into the, as it just keeps going new lows, essentially. And then the thing pops, goes up to 185, whatever it was, then it pulled back. Now it's on radars, and the volume has been a little bit elevated ever since, and now it's curling back up. So if you're watching stuff and all of a sudden a stock you've been watching or maybe a stock on your list pops off the bottoms, like BBIG could be a good example of that. BBIG kind of perking up today. Now watching pullbacks versus the recent lows. If it doesn't go to new lows, then that's your risk. That's your guide. So you want to be potentially buying dips versus the 216 low that we saw on Monday or 2 days ago, literally. And then that's kind of how you'd play it. So if it has continuation potential, it will continue to build higher lows and go. If not, it'll drop down below that 216, and I would be getting out because it could drop down sub 2, and you don't want to hold it all the way down. Unless you're playing it more from a fundamental approach, which is kind of how I feel like I've been playing most of my swings as of late, which is why I'm going to be holding what I have until something fundamentally changes that I just fundamentally have a reason to get out of the trade. But if it's playing a technical trade, then based off momentum, and that's certainly there. All right, let's see. TSRI was another one that I was looking at too. TSRI. Oh, this thing popped today. Look at that. Had a nice little pop. Yeah, it was one that I was looking at as a possible short, and I liked it, and then it didn't die. And I was like, okay, well, it didn't die in the morning, so I don't like it as a short anymore, and I didn't touch it. But it kind of pushed up and had a little squeeze out because it held up all day, and now it's, now maybe it has, this is the short you can take because it didn't make a higher high versus, this is kind of the way you can look at it too. It popped up, a little squeeze out. Now the shorts who were kind of stuck all, potentially got squeezed out and whatever. And now it's the actual short move can be made. Maybe, we'll see. But again, it's one of those stocks you got to be careful because in this market environment too, the obvious shorts aren't there. Stuff that has popped, that's shown it can do it, that's a low float even now, will kind of continue to circulate back into the rotation, it seems like, because people got nothing else to trade. It's like they'll just trade the same stuff all the time. That's what it feels like. All right, let's take a look at this. Let's take a look at the overall market today. So just over half advancing versus declining, so that's positive. The Dow just went red, actually, slightly now. We'll see if that holds up into the close. 200 stocks, almost 300 stocks hitting new highs, 146 hitting new lows. That's a pretty, that we've had days where we're up in like the 900s, 500, 700, either new high or new low range versus a couple hundred in the other range. So it's a pretty, I guess, range-bound day. We don't have a lot of extensions up or down. So we're kind of just chopping around in between. And it kind of feels like that. If you look at the overall, markets, like, look, we kind of look good, and then we kind of pulled back. Now we're up. We're barely up, but it's kind of just chopping around and just sitting, doing its thing. 50 SMA, we still see a lot of stocks way more below than above, and the 200 more below than above. Those are lagging indicators. The 200 is a lagging indicator, so that'll be more impressive to kind of get a feel for what's been going on. I love looking at that just to kind of get a sense for the trends and get a sense for really kind of overall, are we back and regaining prior supports? Are we regaining some momentum? Until we see, I think, more than 50 to 60% of stocks above that 200 SMA, we really haven't gained that momentum back on a lot of other, under the surface names. All right. Anything super, super interesting? Okay, so the healthcare plays that were kind of green when things were red are now red and things are green. So that's kind of an interesting note. A little choppiness, though. UNH is up today. The banks, pretty flat today. Not too much action there. PayPal's down. I think PayPal got downgraded, I believe, which is why it's down. Morgan Stanley, Goldman Sachs, those are down pretty big today. Microsoft, some of the tech names, the big names are up a little bit today. Nothing crazy. AMAT, a semiconductor play, that's up a good bit. I think I've been seeing some semiconductor news. Tesla's up a good bit today. Not too much. Airlines are down today, about 1%, 2% almost. But they are looking like they're trying to rebound a little bit. So we'll see how that plays out. Here's the S&P. Again, same kind of thing. Bouncing off the lows, got to VWAP, and now it's getting rejected again. Seems just kind of heavy on that front, so we'll see. BBIG just really spiked in the past few minutes. It hit 284 now. This is really starting to push because the volume is really coming in. Take a look at these volume candles now. 400,000, 800,000. The last 5-minute candle here was 1.7 million shares just traded in the last 5-minute candle. That's pretty impressive. That's pretty good volume coming in. So it seems like people are looking to come back. I'd say that if you're looking for target levels on this thing, that 50 SMA, that blue line at 325 looks pretty interesting as a possible first stop target to the upside. And then I would say, let's just draw some lines. Let's do some of that. Let's see. We got a little gap fill up here towards about 375. So I'd be looking at 325, 350, 375, all those kind of 25-cent increments on the way up. And that's what I'd be looking at personally. Disney. Let's take a look at Disney. How is Disney building? Disney's flat on the day. Again, why do I like this chart here? Because Disney has been holding up. It's been I think it's a good swinger. I mean, it's a good swing trade idea. It had this resistance right here, 154. Now it's down a good bit from the highs, which is good. So we're down a lot from the highs. Awesome, great. It hit those highs too back in March of 2021. So it kind of fits the bill with a lot of the growth in small caps that got hit, even though it's not. It's a $286 billion market cap. But still, it kind of fits that same chart. Then it had a really big sell-off here around the earnings time in November. and then it bounced and it's starting to kind of grind its way back. And now 154 was a key level of resistance. Now we got above it and it's holding as support. Look at these wicks. A bunch of these on these red days, even green days, the past couple of days for Disney, right? We even have some wickage to the upside up towards 160. So 160 is kind of a key resistance or psychological level we got to get above. But 154 or so has been holding up as good support. Every time we come down to that level this week or this past 2 weeks, some good buyers step in. So I like that. And we've got a gap up here. So I'm looking at possible 175 target is a good target level, I think, in the next couple of months on Disney. So if momentum continues like this. So that's what I've been watching, and I have some, I have a call, I believe, my Robinhood portfolio. But that is that on that one. Let's see. Honestly, not too much is going on. My swings are just quiet. Nothing really is going on. I did see a little bit of loading, potentially, you can say. We had a 25,000 share candle here on NVOS. I mean, is it that much money? No, it's like $30,000. It's not that much money, but relative to the past couple of weeks, it's a decent amount. So we haven't really seen, that type of volume as much. So I don't know, maybe that's something there, maybe not, but I doubt it's really much on that one. So I'm kind of waiting on that one. Super low float. I believe super undervalued, at least as of right now, based on the market cap that we're looking at of 40 million. They're going to do significantly more than that in revenue, and they got a good bit of cash on hand as well. So I'm not really worried. Waiting for the next earnings report, really, to hopefully for that one to be kind of picked up and found, right, is kind of the idea. All right, BBIG back. Let's take a look at this guy again. Yeah, 275. Let's see how it goes. This could be a possible after hours mover too if it holds up and stays a little strong here into the end of the day. Let's see. SPY still up over 470, so this market's still holding up relatively decent. Here's the Dow. Let's take a look at the Dow. Dow, again, is closer to all-time highs than the S&P. And the Dow is on a really good trajectory, I believe, too. If we kind of hold this trend line that we have right here, if we do the math on this trend, which starts here in May, going out to May, this trend is 8%. So if the Dow continues and kind of hugs this trend line, it's going to have an 8% year, roughly. Now, of course, it's not perfectly accurate because we started the year, like, where did we start the year? We started the year actually like close to the top of the trend actually as it is. So if we finish the year up towards the trend line and, we started roughly up there too, we're pretty much in line for like an 8% year on the Dow. So, I mean, I think that's a good solid year, if we get that type of that move, and that would be, a nice slow kind of grind, and it's much more healthy of a move. So we'll see, but that's still on track there. S&P though, we were kind of looking and, hey, having a huge update today I wouldn't want to say it would be a bad thing. It'd be great, but I mean, you'd be right back up to all-time highs potentially, and now you'd be looking at a possible, hedge again. We got to look at getting this going short, something like that. So the faster this thing goes to 480, the sooner and the larger of a hedge I would be putting on. But if not, hey, then maybe the next couple weeks and months it just kind of floats up and kind of grinds and shops around for a little bit. We'll see. I think going into March is that first expected interest rate increase, so we'll see how the market reacts going into that. Now, it's not like, hey, again today, I'm getting these scam calls. Again today, we go back to this. CPI is up. Rises, inflation's up 7% over the past year, highest number since 1982. You think to yourself, oh my gosh, it's horrible. It's going to be so bad for the markets. Rising rates, you got to think the Fed's got to step in. And yeah, sure. But we've also known this. And this was in line with estimates. So because it was in line with estimates, it's almost like it took the uncertainty out of the market in a sense for now. And now we kind of want to see things come down. So in the coming next CPI reports and releases, if that number continues to go up, then that's not going to be good for the markets. If it continues to kind of hold up and never really come down and hold 7%, that's potentially not good, but we'll see what estimates are going forward. So ultimately, that's what we got to watch, I would say, going forward. All right, NASDAQ-wise, looking back, I had absolutely nailed that bottom play on the QQQs. But it was a day trade. I didn't swing that. Could have been a massive swing had we taken that. Wow. I mean, here's QQQ. Look at this. So tech had a really nasty start to the week, and it hit my target to the downside literally like perfectly. And then it bounced a good bit. So I remember I bought 380 calls on that dip, and they were way out of the money. They were like $10 out of the money at the time. But those 380 calls for this week, where are those? They're at $7. I bought these at like 150 on Monday. Sold them, obviously way too soon, but jeez. Sometimes you got to look at the big picture. That's one of the things that I need to do a better job of. I need to look at the big picture sometimes on some of these trades. AMC has been very quiet. Let's take a look. Short-term bear flag. Let's see. Let us see. Yeah, it could be. Yeah, because here's your setup right now. Possible bear flag developing. Here's your flag down, your pull down, and then you have rectangle right here is your kind of flag. So yeah, this thing drops under 21. $20.80 was the low back here, but 21 is kind of that key line in the sand, at least to me. That's, I would say, your level on AMC. Under 21, and this could easily come right back down or have a flash, dump into the teens pretty quick. Maybe even this gap down here towards like $17. It's possible down towards 17 is not out of the realm of thought process. I'm actually really interested because if AMC didn't do right what it did this past year and a half or year really, right? If AMC didn't do that, where would it be trading right now? Like I honestly I'm interested as to where this would be trading right now, because it was trading in like the sub $2 range. Obviously factor in some recovery, but also factor in right the small cap, because it's an $8.6 billion market cap right now, which I think we can all agree is inflated. So maybe this thing is realistically, would have been like a $5 or less billion market cap. Would it have caught on with a lot of the algos, and would it have caught on with a lot of the small cap selling that we saw the past couple of months? I'm curious, like, would AMC be hitting new lows right now? If it wasn't up where it was and had the year it did. I don't know. I would imagine. I mean, I think you got to factor in some recovery there, so probably not. Probably would be up a little bit. Who knows though? Game. Oh, yeah. You know what I was looking at? I was looking at this yesterday too. GME. Ooh, yeah. I kind of like this. Let's see if they're expensive. I didn't look at them. I was looking at this chart, and there's always a risk here, so I would want to play this probably with spreads to cap myself. But I kind of like GameStop down below this 120, and this thing could drop under 120. Could be down to $100 like relatively soon. It doesn't look great, right? So we had a couple of these candles down here. It looks pretty weak to me. So if you were to go to the option chain, let's go out like to March and just like see what we're looking at. So March 18th, if you were to buy the 120 puts, they're like $17. It's not worth it to me, right? Because that means this thing has got to be at 103 by the expiration date in March for those to be break even. Now, yeah, it could have happened, sure. But I'd go to let's go to look at some verticals on these. Let's look at some verticals. Let's just look at like some, we can change this up. Let's just go here and see how these look like. Okay. So if I play, this chart's all messed up again. It's showing me here's GME, right? We want GME. I want these. I want to view these. Order book. No. Whatever. Why is it doing this right now? I'll restart it really quick. But I want to look at what those are going to be trading at, or what we could, if it makes even any remote sense to take a position like that on a GME vertical out to March. Okay, so we look at some of these. Go here, unlock trading. Oh, come on. Why is it giving me a hard time right now? Chart. Okay, here's what these are trading at. Let's go to the order entry, and of course it's being weird. Okay, whatever. So let's just see if we can back our way into it. So if you went with these are singles. We want verts. We want verticals. Okay. Back in here, it's going to cost me. The spreads are so massive. It doesn't make any sense. So that's not a good idea then. The spreads are too big. Yeah, so it literally makes no sense. I would then just say that you're probably better off just shorting shares. I mean, honestly. But you can't even do on Webull, but you'd be better off just shorting shares on like a GME. But it doesn't look good, I would say. It does not look good. Under 120, this thing is probably coming down a good bit. So I'd be cautious there. The chart doesn't look great to me. If you're looking at that as long. The only problem with these is that, hey, any day it could be, well, they had some positive news, the NFT news, and it didn't really, it popped and dropped pretty quick. So that's your risk, is that these could be, at risk of being up 20-30% in a day if you're not, no stop loss in place. But any of those pops have been good shorts. They really have. The volume and the attention is seemingly just drying up there by the day. All right, let's see. BBIG, how is this holding up today right now? Yeah, it's trying to hold up. Looks like it wants to go for possibly a new high as it holds up here. We'll see. I was looking at something here a second ago. Let's go through the top gainer list here. ECOR, 58%. Something random. Let's see. Do we have any news? Let me pull up some news on this. It seems like we got some news. That's the thing, though, that it does seem like we are getting some. Yeah, they had news. They had Gamma Core non-invasive nerve stimulation receives breakthrough device designation for treatment of stress, whatever. PTSD. So that's actually decent news. They had news yesterday too. Patent news. So they had additional news today. Thing pops up here in goes from 53 to 67. And then it dips a little bit here at the open and then kind of gains a trend all day. Now it's up 58%. So it's kind of one of those little poppers. Like, look at that. Look at that chart. It, obviously it's got a gap up here to 150. I mean, that's, who knows if that'll ever hit. This would need to hold trend today, needs to hold up tomorrow in the next couple of days and build higher lows, not drop too much. And then it would have a secondary run possibly. But you see how these things have off these lows. I mean, look at these moves. It's a 75, almost 80%. Off the lows. So that's why I'm a little I'm hopeful that some of these small caps still have have some range. Like NBRV is one that I'm like, I can't believe this thing. This thing is down so much. The CEO also just bought some shares too, which is why I like holding it as long as it holds the 50 handle here. I honestly like it. But like it could have one of those days, right? This thing is at the 55, 56 range, right? 80% brings you up to about $1. So I mean, get to $1, I'd be happy with that. I take my profits there personally. EVFM has a little pop today. Look at this. This is one of the dirtiest dogs there is. Not really, but I mean the CEO I think just also recently bought. The CEO, they handle this thing so bad. It's been such a garbage play, a garbage stock, really honestly since the spike of last year. But this is one that I mean, CEO sold shares like the same day of a product launch. Like it was like the stupidest timing. Then it had a nice little bounce back run, but of course that was everything that ran. And then this thing just died ever since. So it's been interesting. NXTD is popping up on the gainer list today. Take a look. This is one that has run in the past. NXTD, look at this. Here's the daily chart on this thing. Not too shabby. It's gotten, past couple months, gotten a little attention. Held up here just around $3, and now it's at $4. Let's take a look at the 5-minute chart. Look at wow, extension up to the upside, 30% today so far. It's a pretty impressive run. But NXTD is a low floater. It's done it before. It has that history, so it's pretty interesting. All right, Surge, SURG. Yeah, bunch of stocks kind of pushing up into the close here. Vavax, VAXX, holding up pretty nice. FATH popped early. Now it's kind of trading sideways. That's not a good look, to be honest. I would say that's cautious. I'd be cautious on that. MCMJ, just it must be like a buyout or merger or something like that. PBIG is still pushing up. PT, nah, not much. Vine, it looked good, and now it's fading back off. It's a recent IPO though as well. PIK popped early, I believe, right? Yeah, it popped a little bit. It's holding up. PIK actually is interesting because it's a recent IPO, I believe. Yeah, recent IPO kind of fits that same bill. I think it's a low floater. I'm not a big fan, but as long as it holds trend, builds higher lows, it's something to watch. And, of course, you can always be caught up in one of those halt ups, and you don't want to be caught up in one of those. So not something I'd be wanting to short, at least as of right now, until it seems like maybe some more time goes through and this thing kind of dies out. But that's that. Dow went red. decently, not decently. Now Dow's red 0.07. S&P is barely green. Again, same thing happened again here. It hit the VWAP and it broke down again. So resistance right now at VWAP, that white line, that is the volume weighted average price. The S&P can't get above that for right now. Roughly at 471. So it's got some support here like 470-ish, and it can't get above 471 for now. Still got about an hour to go though. Affirm. Let's take a look at Affirm. Where is Affirm? Okay, Affirm's at $80 roughly right now. Popped a little bit today. Yeah, Affirm may be like this, maybe trying to do its thing here. It's interesting because like it came down, filled the gap, and now I expect it to kind of get quiet on some of these names. They had some crazy moves. I don't think we're going to just see crazy bounce backs. I just think we're going to see more of a slow progression or a sustained move if that's what's going to happen on some of these growth names. So Affirm, right, had such a crazy move. Here's your downtrend roughly, right? Now you're at this uptrend line. You're in a good spot. Yeah, breaking back up over like $90 will be key to regain that trend, but that might take some time. Might just not just do that like in a day, right? Which would be, I think, a good thing, but we'll see. Man, I can go for some news. I really can go for some news. I'm probably in the longest drought I have ever been in. No, I'm not necessarily. No, not really. Because the longest drought, I mean, in terms of news, I was going to say in terms of news runners, over the course of the past like 2.5, 3 years, or whatever, of trading small caps, when I'm swinging them, right, at some point we get news. Now because I'm in stuff that has catalysts, that has news that I believe is coming out, whatnot. Looking back through past press releases and stuff. The problem is we've gotten news on a couple of these names. It hasn't moved. So it's not that I haven't gotten news. They just haven't moved. That's just a product of the market. But I can really go for one, man. I can go for a nice, juicy, positive data drop tomorrow on one of my swings, have a 50% day on one, and free up some capital, and we're good to go. We'll see. We will see. All right. Yeah, it's kind of Ecor hit 98. And now it's pulled back. IMRN just flat. I wonder if you can even short this thing. Let's see. Can you even do it? No, insufficient shares. NXTD is, honestly, look at that parabolic move. Look at that, 419. NXT is wild because it's done these craziness moves in the past. It has hit up. Let's just zoom in here and see. We hit, what is this? 34 back in earlier in 2021. Wild. But even along the way, it's had these 100% days. You go back to July, 75% day, spike and dump. So I mean, I'd be cautious. I'd be very cautious on this thing. I wouldn't be trying to go long because it has the history of like spikes and drops. But at the same time, right, it has potential to go for way more. It's done it before, right? It's a low floater. We can even look. Let's take a look at what the float is on NXTD. Let's see what we got going on. 6.8 million float, pretty low floater, and no insider buying, at least reported right there. We have to go to SEC filings for that. Last piece of news on the 15th of December. So there's really this is just no news. It's some of these low floaters are, but that's what I've been noticing this past week. These low floaters are getting picked up kind of randomly for no reason. Something that we kind of usually see end of December into early January. It's kind of happening maybe a month late. I mean, it's early. I guess it's still early, the first half of January. So January poppers, as they say. We'll see if we get more continuation with some of these. Happy 2022. 2022 off to a start. That's for sure, right? Let's see. Let's take a look at. Markets coming. Dow's a little bit. Markets coming in a little bit more. We'll see. It's been just choppy. So let's see what we can do. Broaden it out. Yeah, I kind of think that here's where we were. Big pullback this day on the 5th. Here's where we had a good amount of consolidation. A good amount of trading volume was in this range from like 471 down to like 465, a good bit of trading volume in that range. So I'm expecting us to kind of maybe hover around or even pull back to 465 area the rest of the week or even to next week and kind of chop around a little bit. Got some, you're going to have resistance up here towards about 475. That's going to get you down to the bottom of the range at all-time highs. So 475 will be some resistance, which we got up to 473 today. I mean, kind of got close. And I think we're probably going to hold it. We'll see how we hold up here. But you can kind of tell that the initial, on these bounce backs after these pullbacks, the initial runs have been super nice. And then once it starts to kind of quiet down for a while, the flatter it goes for a bit, the more risk you kind of have almost of that downside pull. So we'll see if how this plays out in the next couple of days. But it's been definitely quiet. I had, let's see, what did I have today? I had Ford that I lost on and took Ford. Again, my biggest issue is I'm not good with identifying good opportunities on days like today where the market's either up a lot or it's up kind of choppy. Kind of like today, it's just choppy. I like the days as much as it sucks. I love the huge down days. It sucks for like the overall portfolios and whatever because, you're holding stuff long, everything's getting killed, right? It just looks like it looks bad. But those bounce back trades, I absolutely love those. Those are some of the best trades you can find. Ford even was one too yesterday. If you take a look at Ford yesterday, yeah, you could have played it with a fairly tight risk. So it kind of came down to the lows that we saw from the past couple of days. And then what that snapback we had off those lows was massive. Almost 5% snapback on Ford, which Ford doesn't move that much. Ford on a 5% snap is pretty impressive. So that would have been a cool, I wasn't looking at Ford, but that would have been a good one too. I was looking at Coinbase and some others, I believe. QQQ from a couple of days ago. Monday was fun. Let's see. Just chopping along here. I guess you can still look at it and say higher lows are being put in for the day for the S&P, right? For SPY, kind of, kind of. All right, let's see if we can go into some other. Let's see if we got any other news. Yes. I think this is probably true. Let's see. Omnicom disrupts transit emergency services. Workers call out sick. Most people are going to get COVID. I think, yeah, that's pretty much what we already kind of knew, I think. FDA commissioner says most people are going to get it. Okay, sure. And I think what you're kind of seeing too, though, is that a lot of the travel recovery play was looking good, was really looking solid last week. I'll pull up the Jets ETF again. Was looking really good last week. And then the thing is, kind of what happened this week is that you kind of got seemingly more of that COVID pressure. You saw some of the vaccine stocks pushing up, and every week it's like back and forth. So you see kind of everyone talking about COVID and all of a sudden, and then the next week it's not, and it's over. Not over, but it's like, okay, we're going to get back. It's not a concern. And this week it's like, maybe it is a concern. It's still a problem here. China's getting lockdowns and this and that, and travel and flights are getting canceled overseas. And then next week it'll be like, oh, well, now the bounce back trade is on. And it's like, we're bound the backside of these curves. The best way to look at it, though, is just look at the curves. Let's take a look at the case curves, and you can kind of see the the truth, I guess, right? If this information is accurate, which you'd hope to hope, but you never know. You never know. All right, past 6 months, yeah, they're up, they're elevated a lot, but the question is going to be when we come back down the backside. So we'll see how it plays out, but we'll have to watch this average, and does it kind of pull back? That's my state. I don't want that. Let's go to all overall United States. Yeah, so it seems like we had on the 10th the highest day noted here. So I haven't seen a reason to believe we're on the backside just yet, but I think it's coming very, very soon. I think I saw in Boston or Massachusetts they're on the backside. We can probably find it. Let's see if we can find it. Massachusetts. Yeah, kind of. It's kind of, let's look at the 33-month span. It seems like it may have happened earlier this week, on the 10th-ish, and it seems like it may be trying this last, I guess, stick here. Could be coming down. So if that's the case, then maybe we are starting the backside in some areas. That's the best way to kind of play the recovery trade, is just literally just watch the numbers yourself. Ultimately, right, it comes down to what the sentiment is in the market and what people are saying, government saying this and that. But that backside curve is really your best bet of just paying attention and saying, okay, like what's actually happening? I don't care about what people are saying. What's actually happening? All right, let's see. KB is up over 11% in the past week. Let's take a look. KB Financial. Look at this. Investment bank. Wow, look at that massive just extension there. Very nice. We're going to have resistance up here at 53.50, like 53.60, up to that 53 range. You're going to have resistance. But if you can get over that, might have smooth sailing up to the 60, 70 range. Who knows on that one. My longs are stocks and calls, Ford, SoFi. I like SoFi really a lot down here as well. Again, what is SoFi up to today? Oh, man, I think it's in a spot. It's in a spot. SoFi is going to be good for, I think, another one of those. It'll have one of those runs. I think SoFi, and as surprising as it sounds, Robinhood are going to trade very, very similarly. They're both kind of fintech plays, right? So SoFi, I think you got a nice bounce. You'll have a nice snapback time, I think, up to like $18. And then the question will be, how does it react at 18? So that's what I'd be looking. I like that play. I really do. And then I like, let's take a look at Hood. I think Hood on these, on big dips are the days to buy Hood or Hood options or something like that. Give yourself some time on those. And just like, I think Robinhood's a great one. If maybe you want to hold it long term, maybe you don't. I don't really, it's up to you. But you could probably sell that thing into rips and just buy the big flushes and then sell into the rips. That's been I think that'll be a great strategy. Robinhood will have one of those days, I think, where it'll go 10, 20%. At some point, it will. It's also news today saying that we need help, that weed help prevents COVID-19 from entering your cells. Interesting. Hey, I mean, there's going to be I'm curious. I mean, there's going to be some interesting headlines, and they're always will. Most people are going to get, oh yeah, for those who don't know too, I didn't get tested for it, but I think I got it this past like week and a half. I had a fever like a week and a half ago, Monday, last Monday. Like a couple nights, like 2 nights of night sweats, so I can kind of tell I had a fever. And then since then, it's just kind of been nasally and congested, but I have completely lost my sense of smell and taste. I can't smell or taste anything at all. Like there's nothing, like literally nothing. I tried. The only way I could tell the difference between like water and alcohol, it's like you can tell like the feeling right inside your throat. It's not like a taste. It's like kind of like a burn or whatever you want to call it. That's how I can tell. But like literally outside of just feeling textures and stuff like in my mouth and whatever, like I literally can't taste anything. So it's like the weirdest thing. So I guess I have it. I got officially tested, which you can't even get tests, by the way, like around here. So it's like, okay, what's the point? I'm not going to pay for a test. Like, I don't need to. I'll just assume I have it and not, mess with anyone. That's really it. So yeah, it's interesting chop. That's another thing too. The Russell's down a good bit today. So yeah, despite the market kind of chopping around, the Russell's down more, and it's still putting in higher lows this week, but it's down 0.5%. Which is interesting, again. With the Russell, let's take a look at IWC, which is microcaps, down about 0.5% as well. Same thing, same deal on microcaps. What about biotechs? XBI ETF right here, down again. This is looking like it wants to go for a sub 100 flush. That is the flush, I believe. I feel like we've been saying that for a long time, but that is the flush, I believe. That is the potential really good dip buy. XBI is your biotech ETF. Now, this is ultimately, to some degree, I want to say it's rigged to the upside. Let me look at the history of this thing. It's rigged up. So, take that with a grain of salt. Take that however you see fit. But this thing is like, if this flushes under $100 and you got cash available, I'd be tempted at buying some. Give yourself 3 to 6 months, but buy some $100 calls or buy some even just shares. Or go ahead and find your cheapest biotechs that you like, right? Those biotechs may be setting up for a bounce. It could be that final, I guess, flush out before that next bounce back. And we don't even need a big bounce back. If biotechs kind of just slowly and steadily kind of grind and build some traction through like the first half of this year, and all we get is a move from like 97 back up to like 120, that would be a really nice move, a really nice grind back, and you'll see some good biotechs, especially low floaters, especially small caps, that'll go nuts along that kind of steady grind back up. You just kind of need some footing in the sector, which we literally just haven't had. So, XBI just continues to make new lows. It seems like made a new low on Monday, and it's potentially going to happen again. If not this week, it may be next week. And then I think IBB, NASDAQ Biotech ETF is IBB. I think I was looking at some people who were looking at IBB coming down into that like 130, low 130 range as a possibility. Yeah, I wouldn't be surprised with that either, especially with more tech selling off if we get that. This is, again, we shall see, but kind of your trend line, not perfect, but it's not terrible. It works, kind of. There's a trend line on IBB. So the trend line right now is back up here towards like 148, 150. I think one more touch that trend and then a flush would be a better spot or a viable zone, in my opinion, on these biotechs. The problem with these is that, hey, a lot of these things are going to be, a lot of these ETFs and stuff that are down now, there's no need to worry about them in 6 months and 2 years and 3 years and 5 years. They're going to probably be higher than where they are. But it's when you kind of put a time limit on it, or kind of mentally put a time limit on it, whether you realize it or not, if you're buying shares, that you're going to screw yourself. That's how I see a lot of these small caps too, that I'm just kind of picking up. It's like, I'm going to look back at some of these in 6 months and a year and say, well, I held this stock for a year. Maybe I got 50% gains. Yeah, I was down 20%, I was down 10%, I was down 15% for a couple months. But if you can hold a stock for a year and get 50% plus gains, I would do that every year, right? I don't think a lot of people get pissed off because it didn't move, or it's down 2% today, or it's down 5% today. And it's like, they don't have a bigger picture view, and they're just not patient enough to stick with some of these things. So I think that's going to be the same story with a lot of these things. Go to like, some people are looking at SQ, look at how fast Block, Square, I guess they changed their name to Block. This thing sold off huge. A lot of people like this stock. I haven't done enough analysis or looking into it myself to say, yeah, I love it and I'm going to buy it for my IRA. But a lot of people like this thing with their ties to Bitcoin. Personally, it's just like, I'll just buy Bitcoin. But there's more obviously there. I believe they own, Cash App and a bunch of those. So yeah, a lot of people, it's one of like the biggest apps, I guess, in the App Store in terms of like one of the financial apps, or money, I guess, sending apps, if you want to call it that. This thing came down super hard. Again, it's probably a decent flush to be buying, and this thing in 6 months and a year, 2 years, probably going to trade way higher than where it is now. So it's like, but you buy options for next month, then you're going to screw yourself, if it doesn't move. ALYI partnership with YPUR announced today. Let's take a look at that. YPUR. OTCs. If OTCs, then I not a big fan of them. Well, nothing against them, but I'm just not I don't trade OTCs. Can't pull them up, and it's just not something that I think a lot of people focus on personally. But hey, it is what it is. Let's have to frame holding. All right, yeah, what's ARCX? ARCX is the space ETF. Well, okay, again, I think this is the same thing there. I don't think that we have touched the surface, I guess, right? Or get it, right? When it comes to some of the space exploration. So we probably have a long way to go there, but you gotta, these are going to be super volatile, because a lot of these are just like absolute just exploration companies and whatever. We literally don't even know, right, the potential of these companies. But in like 20, 30, 40, 50 years, if people are living on the moon, I don't know, I'm just saying, right? What if people are living in space or living on the moon? Like, then it's like, well, this stuff probably is going to be trading a lot higher. A lot of these companies, you can bet that if you're not willing to find them yourself, ARK will probably find them and will do enough, will take care of that research for you. So you can kind of look at it that way too. This thing, again, while it's down, you got to have a long-term vision on it, though. You can't look at space and think to yourself, next year we're going to be going higher. Maybe there'll be hype around some news that comes out, right, that'll hype things up for a while. But like, ultimately, if you're looking at space, you can't be looking at space with any sort of like sub 5-year time frame. You got to be looking 5+ years, in my opinion, right, with that type of stuff. So that's how I would say ARCX. That's what I would want to look at that. Let's look at ARK Innovations ETF, down 2% today. Jeez. I'm surprised too. It's down 2% while the market's actually flat to up. Tech is up, but I guess they're in some small caps and stuff too, and so whatever. But ARK, that's nuts. RK is down again today. I don't know. let's see. BBIG. Oh, BBIG hit $3. Look at that. So we're saying $3 could be a first target. Now 325 is our next level we're looking at, right? Why is that? That's a 50 SMA, 325. And then beyond that, 350 to 375 is would be my next areas to watch on BBIG. AVGR 52-week low. Let's see. AVGR. Oh, what happened this morning? There was an offering, I'm pretty sure. There was an offering. The problem with these is that, okay, they drop an offering. Yeah, $7.6 million registered direct offering, $40 per share, 40 cents per share, sorry. Closing is expected on the 14th. H.C. Wainwright is acting as the agent. Here's the thing with AVGR, right? Gap down. The problem here is that, what are we on? Are we on the NASDAQ? What is AVGR trading on? Let's look it up. It's on the NASDAQ. So they're going to have to regain $1 to remain listed on the NASDAQ. They've probably already been alerted by the NASDAQ to say, hey, you got to get over $1. The thing is, so they have give them 180 days or whatever. Sometimes they can file for an extension. So they're going to do a reverse stock split, in my opinion, because they just did it. They just did the offering. They gave up. So that's the danger for some of these super cheap micro pennies, as you want to call them, the sub $1 stocks. Now the way that I see them is you may look at some of these and say to yourself, okay, they've got cash or they're setting up, they got some potential, whatever, and I might want to start snagging some of these at the bottoms. Yes and no. The risk here is exactly what's probably going to happen with AVGR. This news right here almost to me guarantees you they're going to do a reverse stock split. So all of that stuff honestly is not going to be great for the stock price in the short term. But after they do this offering, after a potential reverse stock split comes, that's when you let the dust settle. That's when you want to start looking at this thing. So give it time, maybe put it on your list, but it's not something that you want to be messing with, to be honest. I don't think right now, unless it just gets picked up and then, it heats up the next couple of days, but they're probably going to do a reverse stock split if they haven't already announced it after that offering. Because, the thing was trading in the 50 cent range, right? And okay, it's potentially possible for you to naturally get your price back over $1 by a certain date. Possibly you have some really good news in the pipeline, but when you drop down to 36 cents, you just diluted shares, you need this thing to make a move of 175%. That's just probably not going to happen naturally. So you got to do a reverse split to get your share price over $1 again. We'll see though. Anything can happen, but that's my speculation there, I would say. NXTD is pushing up today too. We were talking about this earlier. It pushed to 420. Again, look at that, 420. Let's see if we can break 420 right now. And there, it touched it again. Didn't break it yet. Let's look at the 1 hour chart. See if we can look back to the left and find some next areas. It's teasing no, there it is. Break 420. 423 just hit. All right, so you go back to the prior highs here, up towards 4. It's going to get into some kind of, some shop. It's over 450 up to about $5. Will be some strong resistance over that level. Over 5 though, over 5, if it doesn't fake out and rip over 5 and dump, over 5 continuation move could be really nice for a move to 6, plus. Who knows? Hit $8 last time on a big run, so I like that possibility there. But honestly, same exact kind of setup we kind of got right now. It just took a lot longer, but this thing was kind of going to new lows. It went from that 230 or 240 range. It hit 5, get pulled back. In the past couple of weeks, it pulled back, but it started to hold up. It started to hold up around $3. It didn't go down to make new lows. It held up, and all these stocks, I think you got to keep on your radar that make nice runs, not big runs. You want to be watching these stocks that make, decent runs and then pull back. These pullbacks, these higher low pullbacks, as long as they pull back and they start holding up these higher lows, they're setting up for that next secondary kind of squeeze out. And some stocks will do it 2 days. Some stocks will do it the next day after a run. Some stocks will do it a couple weeks after. It's all different, but you're kind of seeing the exact same thing on load. We were looking at load earlier. Same thing here. Look at this. Had a little spike, pulled back, held these lows, didn't go for a new low, and now it's grinding up for more. So I would be watching BBIG for that type of move too. BBIG, if it does get rejected here up around $3, watch this thing in the coming days and weeks. If it holds higher lows here and doesn't drop below that 216. Ideally, I would want to see it holding up over like 225, 250. Then that could be setting up for that next leg of a possible bigger move. CLSK recent news. Let's pull it up. CLSK is an interesting one too, because I think a lot of people have been. This was an interesting stock a while back. Clean Spark. Bitcoin mining. CLSK, they've been in the Bitcoin mining space. I'm curious how this is setting up. Let's take a look. It bottom at 757. Now it's a buck off the bottom. Let's look at the daily chart on it. Pretty nasty sell-off, really, since November, right? Pretty nasty. Let's see if we can draw a downtrend. Did we break the downtrend right now? Yeah, we're kind of trying to break that downtrend right here where we just crossed through. So we could be, as long as this thing, I would say, as long as it holds up over 750, 750 is the lows, I would want to see it holding $8. If this thing holds $8, you kind of have a spot. Now we kind of have this level right here, but if it holds $8, you got a pretty good average, I would think. Risk it to 8, which would be that trend line. Oh, speaking of these trend line plays, look at Boeing right now. Boeing broke one of these, and then look at how it's setting up. Now it had a nice day. It popped up. Now it's pulled back, to finish off the day. Kind of the market's kind of slowly just petered off a little bit. Dow pulled back too from where it was. But look at this. Boeing, this is big picture. We're looking big picture here. We're not talking about like, next week. We're talking like next couple of months. Boeing had this big downtrend. We broke out. We had a fake out, right? We broke out a few months back, and then we fell right through. Now what we did was we broke out of this downtrend. We came back and retested that breakout point. We came back and tested that like 207 level this Monday, literally on Monday, and held that level. And then now we're pushing back up, and Boeing could be setting up for a pretty big move. I mean, I'm looking at this big picture chart here. They just got a pretty big contract, I believe, with a Navy, I forget exactly. We can look at that too. This is the weekly chart on Boeing. I mean, are we looking up towards that 235 area, 233, 230 to 235. That was some of those highs that we had in that fake out. And over that, I think after that point, 250 plus is within reason. And these highs we saw back here in March 2021, 280, we could be looking at, move up into that range. We'll see how this plays out, but we'll see how some of the defensive plays, some of the Dow plays go this year. I would imagine, though, that some of these, if you're just looking at macroeconomics right now and thinking to yourself, big picture view, I think some of these are setting up really, really nice. Obviously, there's day-to-day fluctuations, but macro view, I kind of liked Boeing. I really like the airlines, as you guys know, next couple months, and so we'll let that play out. Let's see. BBIG pulling back a little bit. It's just tough for me to... We need to get, number one, we need to get multiple continuation days on some of these stocks. BBIG had a $4 million 5-minute candle. That's pretty impressive. On the candle, it hit 307. It had traded almost 4.1 million shares. Choking myself out. Excuse me. Whew, choking on the old water, All right, back to the, let's see how the day's finishing up. 30 minutes into the close. Dow is just barely red. NASDAQ 0.16, S&P 0.18. So the NASDAQ and the S&P are kind of trading roughly percentage-wise in line. Advancers, decliners have evened out. We were looking a little bit more on the advancing side. Now we're pretty much even in terms of like the breadth indicator of like all stocks, right? Indices may say we're up, but we know that those are heavily influenced by like Apple, Microsoft, Google, the big names. More hitting new highs than new lows for that. That's I guess a good sign today, which is I would expect that to not be the case, but we are seeing more new highs, which is good, but not that many. Only 200 stocks, almost 300. 150 new lows. Top losers, dogs, NTRB. Let's take a look at dogs. I saw people get crushed on Pet V yesterday. No, it was Pets. Pet Z. This one was an interesting one. Had that huge pullback, liquidation phase, whatever you want to call it. And now it's just kind of floating to the downside. Dogs is the same thing. Dogs had a pretty big, nasty pullback. Tried to get that dead cat. You got the dead cat bounce. You pop back up from 250 to 450. But now you look like you want to just start falling back off even more. I would say that I wouldn't want to touch dogs. And I don't know fundamentally here what's going on, but I'd want to look at it. Back sub 250 would be a better buy in my eyes. Just looking at it on that bigger picture view, I guess. We'll see. All right, BLNK. Jeez, man. Look at this. I mean, this is wild to see. Especially where, like, I'm surprised that, like, Tesla's held up to the degree that it has. I guess Tesla got added to the S&P, and I don't know, maybe people kind of see that as, like, that's good, and they'll just buy Tesla if they are, in need of a stock to kind of put their money, their cash. Maybe. But, I mean, look at this. This is pretty interesting, like how you have Blink down here sub 25 and Tesla trading at where it's at. You would think that, I would think that these would be a little more correlated. Tesla's going, up 4% today. I would think that, Blink and Tesla would be a little more in line to some degree. Now, obviously, when Tesla was down here on the 20th, looks like at 900, what was Blink at? On the 20th. Blink hit this kind of relative low down here, and it tried to bounce for a few days. Santa Rally, whatever you want to call it, right? That was the time frame. And then it kind of flushed out even further. Now, I think Blink is getting down to a point. I don't know. I haven't looked at the numbers. Let's see. Blink right here, $1 billion market cap. You're probably going to come down below $1 billion market cap, if not already, if it hasn't already been done. Let's see what Webull says. Yeah, you're right around $1 billion. Let's see. Price of sales, if that's true, if that's an accurate number, that's pretty nasty. Price of sales is still 67. That's got to come down a lot. So I'm not surprised, though. You're looking at a stock that is trading at a crazy multiple compared to what their actual sales are looking like. Let's see the sales come up, which I expect they will. Let's just look at some of that right now really quick. BAM SEC. I'll go to BLLNK, and let's pull up their latest earnings. And what do we got? Let's see if we can find some. It was amended. Okay, let's pull this up. Quarter 3. Okay, here we go. Revenues. What are we looking at? They were no, they were up. So revenue compared to in 2020 compared to 2020 in 2021 compared to 2020 was up a good bit, right? Over the same span. Product sales looks like 4-something million in that quarter versus like a couple of 500,000, I believe. So, I mean, that's good, but you want to see these numbers continue to push. So 48 was our number right there in quarter 3. 4.8 million. Let's see what they were for quarter 2. Revenues, 3.2 million. So they were up. So, hey, the progression is up, right? Looking at those past 2 quarters. Now, there's a lot more to look at than just that, but that's interesting. Let's see, quarter 1. Did we have any let's see, revenue, product sales 1.6. So the revenue, the progression's up pretty good. So on that progression, you'd expect us to probably push over 10 million in sales relatively soon in one of the coming quarters this year, you would hope. And if you can do that, then you start to, at least align your sales numbers, start pushing up, your price of sales comes down, you start trading at a much more reasonable level because you obviously were way over the top inflated. Now, Tesla price to sales ratio, these are just, price to sales is not everything, but it's an interesting kind of way to judge. Tesla price to sales is 22. It's still super high, basically, but it's not 66. It's 22. So it's a much more, it's more reasonable, even though it's not. If you go to like Apple, what's Apple at? 7.8 price to sales. So that's a lot lower. But Google, let's say like Google's price of sales. Google's price of sales is 8, so it's similar to Apple. Amazon, AMZN is 3.68. Amazon's a much better price of sales, ratio than those. So yeah, I mean, I think it's interesting to look at. So that's why Blink is coming down. CHPT, charge point. Let's see what charge point's at. Yeah, so charge point's at a 34, so it's like half the price of sales that Blink's at. So it's a much more, I guess, reasonable number, and they also have a lot more in sales. So charge point does more in sales. I've also seen tons of their chargers just in downtown Austin, where I live, all over the place. They're even in my garage. Like, they're all over the place. So if I was going to pick one of these companies, just based on what I've seen, I would probably start with CHPT. I'd have a slight bias there. Similar chart, though. And I think that they may have at least a little bit of an easier time for investors to start picking this up before Blink. But, who knows? So, I don't know. It's just kind of my 2 cents on that. We'll see how that ends up going forward this year. But those stocks could easily kind of just consolidate for a while. I mean, look at Blink. It's still up so much off of where it once was. You can zoom yourself back. This thing was trading in like the pre-EV hype days. This one was down at $2. Okay, a little hype there. It was still sub 10, and we thought that was up a lot. So this could come back and kind of float around in the low 20s or even under 20 for a while. I wouldn't be surprised if that's what we get. Oh yeah, Penn's down a bit today. It just sold off the second half of the day. I kind of like the Penn setting up, building potentially higher lows. So we'll see how it is. I got calls out to 2023 on those, so letting it ride. But Penn, let's look at the price of sales on Penn. I'm just curious. I mean, this is what I like a lot. Penn's got their numbers are a lot more appealing to me. PE, we have a 21. Forward PE is 20. Price of sales 1.5. I mean, what? Price to cash per share of sub 3. They got a lot of cash, and they got $5 billion in sales this past year, an $8 billion market cap. That's why I just like Penn so much more than DraftKings. I mean, look at DraftKings. Price to sales is 17. Penn's trading at like such a better price of sales, and their market cap is $8 billion, whereas DraftKings is a $20 billion market cap with $1 billion in sales. So Penn's doing $5 billion in sales, and they're diversified across different revenue streams and aspects and all that stuff. Not saying that DraftKings isn't, but I just like the potential, the multiple verticals you have on Penn, whereas DraftKings there's less. And I just think that the growth there is a little more appealing to me. So yeah, DraftKings could bounce back to like $40 this year. Who knows? And Kathy Wood's been buying it, so she likes it. But I think they just had some news. Oregon's looking to legalize sports betting and sports gambling. But I mean, if there's a sports betting company that I'd like that has more than just sports betting, I think it's Penn, in my opinion. So I would like to see this year Penn disconnect from DraftKings and really kind of push. And the way you're going to do that is earnings. You're going to do that through earnings. If DraftKings comes out with their earnings and it's this is how it's setting up and how it's looking, and then Penn has their earnings and it's like, oh, this is actually looking really good, and this is and that, whatever. And you can start to kind of pull apart the two and not have them trade together in the same sector and the same thing. And then, yeah, that's kind of cool. We'll see. Let's look at Wish. I'm curious. Now that we've been looking at some of these numbers, I'm kind of just curious seeing some of these stocks. What are we looking at on some of these price of sales? Wish has a 0.68, so that's really interesting to me. I think this thing I'm beaten down to the point where it's like, okay, what's going on? People have been talking about buyouts. I mean, maybe I don't know. And there have been some stuff going on internally, though, with CEOs and shares and whatever moving around and leaving this and that. So I don't know. Maybe that there's something going on there, some other stuff going on, inner workings on Wish. But I mean, I personally am sitting here not liking the attention it's got, but it's down here low. So at some point, this is going to probably bounce. At some point, it's going to bounce big, or they'll get some big news of a buyout or this or I don't know. And next thing you know, it gets bought out at like $6 a share. And if you buy it here, it's like a double. I mean, the risk reward becomes a lot nicer. I think it is now a lot nicer here. Got a lot of downgrades as of late, though. $4 PTs, 8, 15, 19. I mean, even a $4 PT is still a nice, from where we are right now, $4 from the 260 or 270 range. That's still 40%. If it ever, pops. I mean, it just doesn't seem like it wants to do it, but maybe it will one day. Alf was oh my, look at that chart. I mean, sometimes it's just fun to just take a step back and look at this thing and say to yourself, look at some of these charts and say to yourself, like, just like, what the heck? This is wild. I mean, usually you don't see this type of, I mean, you do on small caps. It's a very, very common looking chart. But at some point, these stocks spike and bounce. And we have just gone in like probably one of the longest periods in a while where we've had just the sector as a whole. All of these things, doesn't matter what you are, they're all just dead. Absolutely dead. This thing is down to new lows. Let's take a look at ALF. We're looking at a market cap of 33 million. Our best way to look at it is FinViz probably. Just to get a big picture view of the numbers. Okay, float is 8 million. We have insiders own 50%. That's actually really impressive, and that's actually like very bullish in my opinion. When the insiders of a company own half the shares, that's really good because guess what? They're feeling the pain just as much as potentially you are if you're in this thing. So they are probably going to, and they're probably going to get a relief pop and a relief bounce before this thing ever, number one, if they ever were to go bankrupt, delist, or anything, they're going to relief bounce it. So you know you have that relief bounce coming, which is usually going to be pretty massive depending upon how big the pullbacks are. I don't think that's a risk right now for ALF. Maybe it is at some point. But let's see. Insider activity, no, nothing there. But you're looking at, in terms of cash per share of 1.18. So you're roughly sitting at like a little over $10 million in cash. You got a $36 million market cap. You're a tech company. Seems interesting down here. It does seem interesting. Out-of-home advertising experiences, AI algorithms. I feel like I've looked into them before. Oh, yeah. I remember they got put on these tablets in the back of some rideshare vehicles. Yeah, it's kind of cool, but I don't know, like, you know, how well they're doing. Just I want to look into their numbers and, okay, are they growing? Are they not? What's going on? And the hype phase is over, so now you're kind of setting up in a much better valuation right now, I would imagine. Let's see. Baba's an interesting one too. Up 3%. Look at that. It's right at our resistance point. So if we're going to look for a pullback, I wouldn't be surprised if it comes maybe, tomorrow or whatnot on a bot. We can even look at this. Why? Okay, this was a bounce point back here in October. It bounced from this 137-ish area, 138, up to about 182, 183, or 182. Then it fell back off. So I'm looking at this level as a possible zone to be a resistance level. So also gapped up, so we could use a pullback. So what I would potentially look at is some verticals. Let's look at some BABA verticals for this week. Let's see if it makes any remote sense to do this. All right, let's see if I was to look at this. Why is it not pulling up the order entry? Let me get rid of the order entry widget, and let me see if I can open one up. Okay, cool. Here we go. There we go. Okay, so now we got a vertical. Let's go to the graph so it's easier to see. So if I was to play this vertical right now, I'm going to do just one. If I just did one contract, I can even do two. Yeah, I might even play it. So I have resistance roughly at 138 is kind of where I'm looking at, right? Based on our chart. We'll go back to that in a second. And I'm looking at this, and this is a debit spread. So what essentially is happening here is I'm selling a put at 138. I'm buying a put at 139. And I have a capped risk and a capped gain. So my capped gain is $40. If BABA finishes the week under this 138, I make $40. If it finishes over 139, I lose $60, for one contract. So I'm going to do two contracts, and I'll do three contracts. I'll risk me $180 for a 120 gain. I feel like that's fair. It's a pretty fair risk reward there. Let's go back to the chart. Let's just double check and confirm. What do we like? Do we like that? Do we not like that? Does it make sense? How is it trading today? All that stuff. All right, here's Baba's chart. We could easily gap up and keep going. The momentum has been there, but after a couple strong days in a row, I wouldn't be surprised if we get a pullback day. We're up at resistance, so that's kind of what I'd be thinking of if we get a pullback. And all I'm looking for is it just finishes the week under 138, which it could finish the week flat and not even dump, and I'm good on that. So instead of playing puts and potentially getting screwed with time decay, you can go ahead with the options. So I kind of like that. I kind of do. Let's see if I can adjust these guys. Let me go to like this. 137. This could be a better one. I'm looking for this could be a better risk. This is pretty much a 1-to-1 risk reward. I'm going to do that. I'm going to go with these. Let's see these. So I need BABA under 137. Back to the chart. Means BABA has to finish the week pretty much like 30 cents below where it's at right now. Yeah, which isn't, and then I think, it can certainly go next week. But I'm thinking that if we're going to look for a short-term, resistance, that could be a spot. So that's not a bad idea. I'm going to take that. 137 we need. I'm going to do 3 of these. So essentially, debit spread's going to cost me $153. It's possible that I lose all of that, but it's also possible if this expires by the end of this week, under 137, I make $147. So I think it's pretty fair in my opinion. I am going to take it. And we are in. We are in. Boom. Okay. Cool. Let's see how that goes. Let's see how that goes. Wish me luck on that one. Let's see. Anything else going on that I want to look at? Mesa. Just chilling, shopping around. Body has been such an interesting one because it's just dumped out, just continuously dumping. I'll be honest, I haven't looked into them as of late. I just haven't been interested. Let's see. Still a pretty high market cap. Price of sales, 0.74. So it's a pretty attractive play. 0.74 price of sales, pretty attractive in my opinion right there. Decent amount of cash. Nothing crazy, but a good bit of cash. I'm honestly, this is not a bad. I mean, I feel like I've been saying that for a while, but I don't think it's a bad investment, honestly, if you give yourself some time on Body. I would want to look at their recent history, look at some of their earnings. Are they making moves up or are they making moves down? What's the move on them? But if they're kind of doing, if they're doing better, and you're going into the summer too, and Beachbody technically just does more sales. You're also coming out of the winter when we get a little spike. So next couple earnings may do decent. May show this is this valuation's a little low. I mean, I think it was a recent SPAC. It's getting hit with all that. So this is kind of one of those that's just, I feel like unfortunately a product of the market conditions. So we'll see. But I don't necessarily dislike it at these levels. I would definitely want to, if anything, I'd be buying. I wouldn't want to be shorting this. If you're shorting Body down here, it's like, what's your risk reward? It makes no sense. It just, to me, it doesn't make any sense. So now we'll have to watch. We'll have to keep our eyes on BABA. This also could be like, if BABA dumps, what I could do is I could just get out of this thing, like, and get out early. But what I did on those is I bought a call that's currently out of the money, and I sold a call that's currently in the money, I believe. Or is that what I did? Back to the order entry on these guys. Let's find the ones that I got. Was this? And I'm going to need to go back and remove that. And let me just confirm that that's what we did, because it's going to be a good visual, I think, to see. All right, go back to the graph. Here it is. So, we bought a call. Oh, we bought a put, sorry. Bought a put that is out of the money, or that's in the money, sorry. This put's in the money. So we bought this one that's more expensive than this one, and we sold one that's cheaper. Okay, so it cost me money out of pocket, right? Net. Now, if BABA goes and finishes under both of these, well, what's going to happen is these puts are actually going to go up in value. But since I sold and I bought puts, different strikes, I'm capped at my gain. My gain is capped because at some point you go in the money on both, and when both are in the money, it starts trading kind of 1-to-1, and so it caps you at like, okay, that's it. Now, if BABA goes to like 130 tomorrow, who knows, right? Then technically, if I had just bought the 138 puts, I would have made a lot more money. But if BABA goes to 140 and breaks out over resistance to finish out the week, then I could lose my entire investment overnight, whereas I'm fine with a capped risk of $150. So I'll risk $150 to make $150 roughly, because I like those odds because we're at resistance. So I'm using historical charts, I'm using historical patterns to put myself in better than 50-50 odds in the way I see it. So it's better than 50-50 odds to me for that to actually work out. And then if it works, I make X. And if it doesn't work, I lose X. I don't lose 2X to make X, right? In a sense. That's how I see that play, right? It's a cool way to play options without having to worry about time decay, and it's pretty straightforward. So that is that play on BABA. And, it's nothing crazy. It's $150. It's like, okay, go out to dinner one night if it works, like, almost. So you can think about it that way too. I don't currently own any Shiba Inu. I did, and then I was up like 100% and I guess sold it because I got into the party late. So that's that. But what I am doing is I just set up today. It's actually up 15% today. It's pretty good. Bitcoin's up today, right? So Bitcoin is, surging a little bit, which is helping some of the altcoins. Yeah, Bitcoin's up 2%. So far it's holding that support. But what I did was I started to set up some automatic deposits to some Bitcoin and Ethereum. I think I went with a 70-30 split Bitcoin Ethereum. So I'm depositing an automatic amount each month. And it's just like every month, just do it. And I don't care. Let it go. I'm hoping, and maybe we don't go into a bear market this year, but if we do, and when we do go into that, span of time, we see a pretty big bear market, it'll just be doing it. And I'm not gonna have to think about, oh yeah, I should probably buy some Bitcoin now. It's pretty low. It'll just do it every month or every week, whatever. And so that's kind of my strategy going forward, to bring my averages, down, I guess. I don't even know where my averages are on these things. I had some Bitcoin. I remember I bought some on the initial push over 20K, before 20K, and sold some of that up in like the 40s, 50s. And then I bought some more, and then I bought and sold some more, and then I bought some more. I just kind of like a little bit bouncing around all over the place. But, okay, look at this. Market's going to close soon, and we just kind of pushed into the close, looking pretty strong. So market's up 0.38. Interesting. Market's up a good bit now. Let's see what the Dow is looking like. The Dow is pushing a little bit to the close. The NASDAQ up. It's trying to push. Nothing crazy. The Dow's back up to nice and green. Nice push into the close there on the Dow. Let's see what Boeing's up to. Boeing's probably making a push too if the Dow is doing that. Not really. Boeing is kind of just slowly kind of grinding up a little bit. Nothing crazy. How the airline's looking. Yeah, they're trying to push into the close. And for those who didn't see early on, I was mentioning this. I started a position in some of these calls for Mesa out to July 15th, I believe, is my time frame on these. So I bought some of these, and we'll see how it goes. But I'm playing these out to July, so we'll see how it plays out. I think we got to move to 750. I think 750 at a minimum. I think 10 realistic, and then after 10, I'll just be like laughing, and it'll be sick if we go 10 plus, and it'll be insane. But I think we can do that, and we did it last year. I mean, look at this from this span. I mean, I look back to this chart, say it's possible. We went from 650, which we're lower than that now, to 17 in like 43 days. 43 days. Like we did 170%. So I mean, hey, I think it's very possible that we get that type of move. At least to 10. Nay, not to 17, but to 10. I think that's how you kind of got to be realistic with some of these recovery play moves. Let's see. What is going on here? NXTD 420. How did it push? Did it push any further? Yeah, it hit 429. BBIG, it's still pushing higher lows. Vine, no, not really doing anything. Surge, NXTD, eCore, holding up. It's kind of holding up VWAP right now. IMRN, a little pop there. FATH, trying to push into the close. VAXX, interesting. BBIG. I was looking at this too, and it made a lot of sense. I was just seeing I saw a thread somewhere, and people were talking about shorting environments and how we're not necessarily in the best shorting environment right now for small caps. Why? because all these stocks that kind of run are almost recycled. Now we're starting to see some new ones go, but a lot of these pumps are like recycled pumps. So it's a stock that ran a couple weeks ago or a couple days ago, and now it's back on the top gainer list and is running again. It's these recycled pumps, and why that's dangerous is because there's less. So when everyone jumps on the same stock, the risk of a squeeze is higher, because if everyone's on it, right, shorting that stock is risky. Now, if it's the other way around and there's 10 stocks today that are all up 50+%, well, then there's a bunch of pickings, and you want to go and try to find the ones that are less, there's less attention on them, lesser volume potentially, and those could be your opportunities for some shorts, for some backside moves. So we're not in the best environment really for shorting these small caps, because most traders are not going to short these things at the all-time lows. I mean, if you were shorting BBIG, I understand you, but if you were shorting BBIG 2 days ago, and you initiated a new position and you weren't looking for a scalp, your risk reward is not that great. The thing has already come down massively. So why weren't you shorting it, a month ago or 2 months ago or 5 months ago? Now, shorting it as you're falling back down to 52-week lows, it's like, what's the point of shorting the stock now? So that's kind of the idea that I see with shorting. I would never want to be shorting these things at the lows, but I would short small caps up towards the highs after they finally crack a trend and they start to fall off and they start to die. Well, then there's better opportunity. Now you guys got to make sure you're careful and make sure you watch your upside and have your stops in place. But it's a much better risk reward on a green day or when things are up. All right, so here's the finish the market. It's about to close here in like 3 minutes, 2 minutes. Advancers, decliners, pretty even. Almost 300 stocks hitting new highs, 150 hitting new lows. Dow is up 0.2, NASDAQ 0.3, and then, the Dow's up 0.14, NASDAQ 0.2, and then S&P is 0.3. 0.3. That's what we're looking at right now across the board. Let's see what my Robinhood's up $20 today. There you go. Let's have some fun with that. I have some Disney calls in there. That's why. Is it Disney? Disney's actually down, but look at the chart on Disney. I like this chart. I really do. Each of these kind of bottom wicks have been getting bought up, showing us we got some good buyers coming in every time this thing dips, and I like it. I got out of Starbucks SBUX because, and a good thing I did, because it doesn't look good. It's falling under 104 and doesn't look great, to be honest with you, so I don't like that anymore. This could be even an idea for a short. You can look at this and say, well, maybe you're going to play some verticals on this guy and look for a dump down, and maybe this is actually not a bad idea. Let's see if I can pull it. Not really. Maybe it is. I don't know. I don't want single options. I would want a vertical on this. We got like 40 seconds to put this in, if we can do it. Okay. We under 103. I would not want that. I would want this, and I would be risking, if I did one contract, I would be risking $60 to make 30. Is that really the greatest risk reward? No, we're kind of at support. A bounce back day tomorrow, and this is easily going to go down. We'll go red. Not really worth it, but it's not. I mean, it's not a terrible idea, but it's not super appealing to me. So I'm not going to touch it. But you could trade that as well, honestly, for these Starbucks plays. Market is now closed, so we finished the day across the board. Here's how we finished. Let's go to the 5-minute chart. S&P finishing up here at 471.14. The Dow, the DIA finished at 362.95, and the Nasdaq IXIC 15,188.39 was our final numbers, I guess, on the day. Alrighty, so across the board, pretty chop around day, I would say. We got there's some bouncers, some decent bouncers today in terms of some of these small caps. OCGN, someone just mentioned OCGN popped this morning and then faded right back off. Actually, look at mRNA. What's Moderna doing? It's chopping around. If this thing pops, you had your day on Monday. If mRNA gets up towards that 250 again, I would be interested for a short idea. Vect, a little pop into the end of the day. 510 pushed. Okay, we'll see how that goes. It's been holding it up pretty nice. DWAC. What's DWAC doing right now? How did it finish? Up 11%, closing up towards, oh, that's looking pretty good. Yeah, it is. This had some resistance here around 67-ish, 66. Yeah, it's going to have a 77 area, and then I think it could be going, we could be seeing $100. It's not out of the question. But with this running up, PUHN is also pushing up a nice bit as well. This thing was insane. Fun on the 21st to the 22nd. This was nuts. How this thing went from like $1 to 25, like 2,000%. Like, what the heck? It was insane. I think it actually went higher than that. Go to the 4-hour chart. I think it did. Yeah, no, it hit 24. Okay, but still pretty impressive. Pretty darn impressive. All right, well, that said, market is now closed, and I'm going to wrap things up. Thanks for tuning in. All I ask is a thumbs up on the stream, on the videos. We're going to be doing these Monday, Wednesday, Friday, and then Sunday nights like usual. That's kind of the new routine right now. So that's the plan. That's the ideas going forward. I appreciate you guys for tuning in. I just posted, for those who want to learn more about TD Ameritrade, and if you want to learn how to paper trade options, okay, so we can talk about Webull. Webull has a paper. This is Webull's platform, by the way. 2 free stocks down below, whatever, all that good stuff. Links and resources down below in the description. You can paper trade here, which is trading with fake money, but you can't paper trade options. TD Ameritrade, you can. I just did a video on the TC trading channel. Link should be down below. That goes over that whole process, how you can do it on your phone, on the desktop platform for TD Ameritrade. So check it out. It's free. All you need is an account, and then you can do that. So that is on the TC trading channel. Link should be down in the video description for that channel. We post like once a week there, just tutorials. If you have questions, I look through comments, questions that I get over time, and I'm like, hey, this is a common thing. And I know the option paper trade thing is like one of the most common questions I get.